few years back, Warren Buffett, one of the richest people in the world, and for many, many years, one of the most successful stock traders in the world, was quoted as saying the best investment for a novice investor would be to buy a passively managed index fund of the S&P 500 rather than trying to pick individual stocks. That message has changed. For anyone who has an investment in one of these passive index funds, for example, the Vanguard VOO, to use a stock acronym, index of the S&P 500, can attest, regardless of whether it's the VOO or it's the VTI, again a Vanguard fund, which claims to be a model of the entire stock market. The fate of the position on a day when big tech is down, when FANG is down, is the same. FANG is down, and each of these passively managed index funds are also down. Why? As the following screen scrapes will make clear, the fact is, for both VOO and VTI, the makeup of the first 5 or 6 of the top 10 holdings is exactly the same. So whether we're talking about the S&P 500 or we're supposedly talking about the entire stock market, the top 5 holdings, which in the case of VOO, or actually the top 6 holdings, which in the case of VOO amount to over 24% of the entire fund value, are none other than the FANGs. Apple, Microsoft, Amazon, Facebook, Tesla is in there, which is not a FANG, but it's a tech-heavy play, and Google, the Google Class A and the Google Class C stocks or equities. Regardless, again, whether you're in VOO or you're in VTI, it's the same story. The fact that VTI is somewhat differentiated in terms of its performance this year to date, is the result of the fact that the impact of those FANGs is lessened because of the breadth, in theory, or it would seem to be the case, of the rest of the portfolio of stocks included in the fund. So in the case of VOO, as I mentioned, it's over 24%. In the case of VTI, it's actually, just let me check this, it's actually almost 20%. It's 19.54%, and so VTI is 18.7% less biased and less influenced by the FANGs. Another point about the FANGs are one industry: technology, information services. Facebook is part of the communications sector and I think Google as well is in the communication sector. But for any savvy investor or any technically savvy investor, and by technical I mean in terms of having an understanding of information systems, not a chart analyst. As any tech savvy investor knows, putting Google and Facebook in the communication sector seems to be a rather arbitrary choice to try to indicate less sector bias. But the bottom line, both of these supposedly passively managed index funds are heavily biased to the technology sector. So get used to it. If Apple is down and Amazon is down, or even if Apple isn't down but Amazon is down and Facebook is down, expect that your positions in the S&P 500 index fund that you own are also going to be down. Something that has exacerbated this as of late is the kind of chicken game that Mark Zuckerberg, the CEO of Facebook, is playing with the Australian government on the topic of news. So when one of these big chunks of the fund acts rowdy and the market negatively reacts to it, expect that your position will take a big hit. Not so the case with Invesco RSP. Invesco RSP purports to be an equally balanced S&P 500 fund. And as the screen scrape I'm showing here indicates, that is absolutely the case. And since January 30th, this fund has actually fared very well versus the Vanguard's VOO, or for that matter, Vanguard's VTI, because it is less tech biased and less tech heavy. You might want to consider it. I'm not advocating it. I'm thinking about it myself for my own portfolio. If I do take a position in it, I will talk about it as to how well I did with it. But it's something to think about if you're looking for some protection as the market goes to cyclicals as a result of the fact that the overall economy is improving, which is the case right now and doesn't look to be stopping anytime soon. My name is Ira Michael Blonder. I'm an investor. I like to talk about things that I think work versus things that don't work, and I also like to try to provide some defensive warning when I find something that doesn't work and I think other folks should know about it. I also have a company called IMB Enterprises Incorporated. I founded the company and I'm actively managing that company. We're actively working in the enterprise software space and have been doing so for the last 10 years in a sales, marketing, and consulting capacity with the CEO of one of the companies in the digital adoption space called Visual SP. If you have an idea and you'd like to talk about it, please don't hesitate to give me a call. If your idea can be presented in 10 minutes or less, I don't charge for that type of call. My phone number is area code 631-673-2929 in the United States. I also encourage you to take a look at my blog, which is at https://www.imbenterprises.com/our-blog, and also my personal Twitter page at Mike the Bebop. Speak to you soon.